weather in the upper Midwest, including some of our areas to the west of us in Iowa, Minnesota, Wisconsin, and there are a lot of soybeans produced in that area. If they have a freeze, that could result in a huge adjustment to yield. Still, it could cause, if you recall, I don't know if you go back far enough to remember that triple whammy year that we called 1974, where we had, the late spring, the hot summer, and the Labor Day frost. Significant price impact because a lot of beans came out green, and that's all history and in the past. But we, looked at the market, got this crop report. When the traders looked at it, they said, well, this is a bit negative. They took the prices down. So apparently they aren't worried too much about what the effects of the frost might be. And I'm not, any smarter than most of the market. So if I'm assuming I'm looking at fundamentals and I'm trying to make a decision on that base, I'm better off. I better stick with the charts, because the charts are going to tell me or what the crowd thinks and what they're going to do. Now, as I looked at the soybeans, and they can be, as I say, a little emotional, a little volatile. There are times when they can jump all over the place because they're a very popular type of a market to trade for some people that are new to agriculture. So sometimes what I will do is, instead of looking at soybeans, I will look at one of the products, and that is soybean meal. Soybean meal doesn't have the same volume. A couple of other things it has going for it. For example, it has a minimum performance bond of $1,688 versus what they have with the soybean futures itself of $3,375. So you have, a significant difference in the amount of money, performance bond that you'd have to put up. Secondly, when I look at the soybean meal daily range, I use $6 as kind of the average daily range, and again, it's a rough approximation. So I'm going to say $6 above or below the predicted high or low is my entry point, and $3 as my exit point. Well, $6 in meal is $600, $3 is $300. So you have your total amount of dollars at risk exposed being somewhat less, and you have somewhat the same signals. You still have, of course, you have your doji top. You still have your candle here that dropped down below that predicted low and gave you a potential selling spot. On September 1st, that predicted low that we had there, the same thing that we pointed out on soybeans, but in the case of soybean meal, we had that predicted low there was at $3.85. So taking $6 away from that, I'm a seller at $3.79. That took a couple of days, just as I did with soybeans, and about $3.79, somewhere right in there, is where I would have a short position, and then keeping a stop $3 from the entry point or $3 above the predicted low, or predicted high rather, as the market moved down. So it's kind of the same situation, but with a little less emotion. And now we have a situation with soybeans. Maybe they've digested the weather, maybe things are in the market, but you can see we're having the possibility of a little turn. We can see here that we have a doji-like bottom. Dojis are not as effective generally on the bottom as they are in indicating the top, but we do have another sign here also. Neural index has moved up to 1, and we are starting to get a bit of a crossover in the predicted differences, with the medium term kind of starting to move above the long term. So there are some things to suspect that this possible turn in the market to the upside. In this case, we would exit at, as I mentioned, above that predicted high on this day that we have right here, where we show with the arrow at 367 at $3. So we would exit at 370 if the market gets to 370. I didn't glance at the last price today. It may have hit that, but if that were the case, that means we would be out. Then if the market does continue back up, and if we do look at those indicator clues that we saw below, we would buy on a move $6 above that predicted high of 367, or buying at 373, which would put a buy spot right in there for a long position. Kind of a rough overall type of perspective on what you might do in soybean by looking at both the technical indicators and looking at the various indicators that are provided, momentum and so forth, that are provided by the Vantage Point software. We're going to look at a couple of others. We don't have a lot of time, but I do want to hit a couple of others at least briefly. There is the euro. year chart, you can see kind of where that trend has been, overall big picture. Had a nice run up from here to there, and then you see that we had a situation. We're going to cut back on our time frame after you've seen that. You can see that in this particular case, we had another type of a situation where you had kind of one of those little sideways movements, the collapse of volatility after the market made a run. It made a run, and zoomed up there, got into this little box area, kind of traded back and forth, and then in about 2 days lost everything that it had made in about 10 days previously. So those little spots, again, we have these little turning points right here where those little spots where the action indicates that you could have turns in the market. You have a situation here, you have a hammer. You have a situation here, a doji type of the top. So all of these kinds of things indicate that we could be at a point in time where we want to look at our indicators more carefully to see exactly what we're going to do. When we look at the situation in the euro specifically, the other thing about the euro that we can look at and point out here is that with the euro, we know what's going on in the world markets. We know what's happened with the euro overseas and all the problems it's had, and yet despite all that, it has been moving to the upside, or it was moving to the upside, all that bad news. And then you look over here, you see, okay, well, we put a line across the top. That's about as high as it went, got a few jabs and so forth, working its way into an ascending triangle. The thing about the ascending triangle is that when you look at this candle here, you look at about the highs, that high end of that, and that high occurs roughly around the 145 area, thereabouts. And so you look at the low, and you look at this low down here, and you say, well, that low was in the vicinity of 130, so 145 from 138, that's about 7 cents. And when you look at that breakout point, we're going to look at the breakout point here and talk about if we broke out through this area right here, and I will just say to make it an even number, about 143, we break out below that, we should have a target that equals what we have here. We should have 7 cents there, we should have 7 cents here. 7 cents here takes it to about 136. So if you're a traditional technical analyst, you're saying, well, I expect that we're going to come to at least a kind of a decision time, a battleground in the vicinity of 136 or thereabouts, and that the market then might bounce from there. And of course, you are reading the news, hearing the news, and all the problems seem to be resolved, at least for the time being. And it's kind of one of these, on again, off again type of situations, kind of a bit of a circus, but it's going on. And who knows the long-range future of the euro and whether it's going to survive and do all that. But as for now, it's doing fine. We're going to add real quickly. We're just going to put in a high and low price just to talk about that, because we don't have a lot of time. And we're going to cut back our time frame here to 2 months and kind of get an idea where we would be. In this case right here, you can see that if you are following this market, you probably would have been in a situation where you would have said during this time frame right here, wow, not much of a trend.